Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Monday, the 10th of June. A little bit more follow through, not as much oomph today from the bulls for the most part. Tech pretty strong still. Felt like we were, kind of getting a little tuckered out, but whether that's true or not, the bulls did take another one here today, officially closing in the green. Good morning there, Lloyd. Welcome out. Welcome out, everybody. Hey there, Scott. Good to see you, my friend. I hope everybody had a great weekend, had a nice start to the trading week. I like a little bit more of the same. Saw a little bit more of a pullback develop over in our utility sector, and to a lesser extent, our REITs as well. Most of our stocks closing in the green. Not a lot of good movement over in some of the the Visas, the AT&Ts. We saw some profit taking too in a lot of those defense companies that have performed so well. So felt like it felt like, and I don't even know if it looked like this, but it felt like it's about time for a little profit taking. That's kind of the way it felt as the trading day developed here. And good afternoon there, Fortino. Good to see you. Awesome. Looking forward to it, Fortino. And hi there, Micah. Great to see you as well. Hope you guys had a fantastic weekend. Our Lily, who we were talking about for a K trade just last week, kind of knocking on the door of resistance, getting pretty darn close to knocking on the door of support now. So maybe we'll take a peek at them here before the day is done as well. On the earnings side, very, very light. We do have H&R Block, an S&P 500 company, reporting before the open tomorrow, but I think in total, there's only like maybe just over a dozen companies reporting either tonight or tomorrow. Most of them not particularly huge names. So we're not really there yet on the earnings side of things. Right out of the gate, we gapped up on the open. Futures were looking good. We really started to just kind of keep on keeping on like we have been doing the first part of the trading day, and then really the second half, it was just nothing major, nothing dramatic, but really sellers just kind of getting back in, right? If you look at this 15-minute chart on the S&P 500, and I don't want to go too crazy here, but this is the first time that we've actually worked all the way down into that 15-minute 50 moving average, which again, may not necessarily be a huge deal, but we've had such strong momentum. Even this short, this 15-minute 50 average has not even been tested. If you kind of look, it looks like we're kind of, is it a pullback or is it a little bit of a break, right? That is the question that I have going into tomorrow. Still knocking on the door of that resistance right around 29. It would make sense, at least in my head, it would make sense to see a little bit of a pullback develop in this ballpark. Good afternoon, Patricia. Great to see you as well. But even again, you can look at here on the hourly or on the hourly chart, still hanging right on that 9 EMA. We've not been below it. I mean, that's kind of crazy if you think about it. But on the SPX, ever since we got moving on Tuesday, we have been above that 9 hourly nonstop, and we're just now starting to see it kind of maybe show some weakness, flattening out, testing it now a couple of times. So I'm kind of going into tomorrow with the expectation of a little bit of profit taking. Personally, is that the right way to go? I don't know. Time will tell, and I'm not certainly a super bear here, but I do think with the way that we've developed, and you take it out to that daily time frame, that's a pretty good gravestone candlestick. If we see some downward movement, again, we've reclaimed a lot, right? We broke resistance. I don't know if you could argue that we've closed above it or not, but we broke it. We've reclaimed some of these moving averages. I'll be looking at more potentially as a pullback from a larger sense. I'll be looking to go bearish in things that are bearish. Basically, I'm not going to look for the whole market to free fall, if you will, off of resistance here, if that's even the way that it goes. And if we continue that momentum, if we can gap up on the open, we'll recapture all of those things, and we can maybe debate having this conversation again tomorrow, right? So that's where I find myself. We did test the 29 here today on the S&P. Again, I think a pullback would be healthy at this point. From what I'm seeing from a bullish point of view, at least, use a little bit of consolidation, pullback for a reentry later in the week. Still lots of bearish retracements out there if I'm looking for those type of opportunities, which, of course, I think we always are open on both sides of the coin. I'll be watching these averages. That's kind of where I'm going to be watching. Where do we call support? I guess you could argue a lot of things. You could argue the 50, but we've pushed through that so many times as late. I'll respect it, but I'm not going to fear it as a support or resistance zone. Is it, the 28, 50 or the slowdown here? I don't really know where to call support. So I'm going to watch that 9 EMA as it works its way up, at least the beginning part of this week from a support side of things. On the resistance side, if we can clear this out here, I don't think it closed there, and that candle doesn't give me a lot of confidence that it wants to happen tomorrow. But if we can push through here, I mean, there really isn't a lot until we push those highs. And so I think you have to respect that side of it as well. And good afternoon, Linda. Hey there, Adib. Good to see you guys. As always, hope you are doing well. Hope it was a nice weekend. It went by fast. It was so windy out here in this, at least the southern part of Utah. It was crazy. It was not normal. So things were blowing all over the place. Hey, Jazari, great to see you, my friend. Good to see you. Over on the Dow, not much different. We did have that little gravestone doji type of candle. We have broken that resistance already, unlike the S&P, where I think you have to argue that it hasn't broken out. Over on the Dow, I think you argue that it has. Just from a pure price point of view, we do have to kind of contend with our old zone here in that 21 or 26 170 range, right? We've seen a little bit of history there, but much like the S&P, pretty extended. I think the best opportunity will develop in a relatively mellow pullback into late week. I think that's the best trading environment if we can ask for one, and it never hurts to ask, right? On the other side of things, we did this little bit hanging over us that did even act as our intraday resistance here today. If we can push through that, again, not really any logical reason in my mind not to think we're working into those new highs. All of a sudden, we're getting pretty close to these major resistance zones all over again, right? On the support side of things, again, with where we are, we can use these price lines, and we certainly will if we need to, but I'm going to be looking for something new to develop. So I'll be watching those short-term moving averages over on the Dow Jones here as well. I mean, at this point in time, don't you really have to call support way down here before you get a signal? And I think you probably do from a pure where is support, and that's an awful long ways away. I'd like to find something else to develop between where we are and that swing low. NASDAQ, definitely the biggest winner here today. Pretty strong day, but again, as you can kind of see, after a really strong start, just really came off of those intraday highs. Not enough to really turn those charts bearish, at least on the intraday yet, at least, but certainly a little less positive than it could have been with a little bit of a different developing type of a candle. Still have to work with that 76 zone of resistance, but we did reclaim 75 here today. We saw a lot of good movement in the chip makers. The big question I have on the chip makers is, can you trust them? Because they've had a really nice bounce back these last few days. You've got an Applied Materials, and other than AMD, who clearly I think looks the best, and I know a lot of you guys work with them, and hope you have been. You have plenty of things that are looking more along the lines of LRCX here that haven't really reclaimed trend, maybe arguably have reclaimed neutrality, but have not really, at least to me, shown enough to say, yeah, I can trust them from a bullish point of view. Of course, semiconductors going up is always going to help the NASDAQ, always going to help technology, at least in my mind, it's going to be directly correlated with them. So that's going to be an interesting fight. These things have started to show some signs of strength, but still looks more like a bearish retracement if I had to claim, although maybe not a textbook bearish retracement at this point in time. Back over on the NASDAQ, 76 will be that support, or I'm sorry, that resistance zone. Again, at this point in time, I'm going to wait for that new developing level of support. I guess we can look to this old low, and that's probably where I'll kind of train my eyes, but hopefully something new can develop in the days to come as far as support goes, because 73 is a little bit a ways from where we currently find ourselves. And over on the rut, no surprise, not much different. Depending on you and how aggressive you do things, you could argue that we reclaimed this old support zone. I have it between 20 and 20, 1520 and 1525. So we kind of right smack dab in the middle, with where we ultimately closed here today. I don't really feel like that gives us enough information to say, yeah, that's a signal, or no, that's not a trading signal. Still have my concerns, but I do think for the most part, we've kind of worked our way, or at least we're trying to work our way back into some neutrality over in the rut. And what this is all going to line up into is a lot of stocks are either going to be pushing through some resistance zones or knocking at some highs, like a lot of things over in tech and things like that, or they're going to kind of look like some bearish retracements in certain areas. So I think this is still going to lead us into a market where we're really kind of focused on individual components, as opposed to just buy because the market's going to go up, kind of like last week in hindsight, at least, just buy because everything was going to go up, right? 2 weeks ago, sell because everything was going to go down. It feels a little more like a stock picker's market. But the one thing, and we talked about it a lot last week, and we haven't had it happen yet, I'm always, after we see, where we've broken down, where we've made lower highs and lower lows, so just objectively, we've shown some weakness in the form of lower highs and lower lows. I'm always interested in when we have that first profit taking. We just have yet to see it, right? Because that's going to, at least to some folks, look like a bearish retracement. There will be some intraday players out there selling. Some swing and more position styles will be looking for bearish entries off of this rally. Is it mellow, and does it ultimately create that higher low, which is a really good sign of strength? And if we see that, I'll certainly be looking for us to try to work back into these old highs if that develops. We just haven't had a chance to see it one way or another play out yet, right? So that's going to be the story for me, at least this week. Hopefully, I guess we could just go straight up again, okay, because we still technically made a higher high and a higher low today. The candlestick development wasn't great, but technically higher high and higher low, can't dispute that, right? So should be an interesting week in the market for sure. Most of our sectors are going to have a very, very similar vibe to them here today. We've looked a lot, especially throughout the course of last week, how much strength we've seen over in the material sector. That was one heck of a run. There is no two ways about that. Hanging out at this old 58 zone of resistance. Again, for trading purposes, for new trades at least, a consolidation or pullback is probably ideal, right? So many of these things are so extended, at least they look extended, they feel extended, whether they are or not. Do we really, am I looking forward to going in and buying into, to lend this high? Maybe I should be, but no, I'm not. And to a certain extent, most things, especially most of the big names, are looking a lot like that, right? A little pullback, a little retracement, a little consolidation could go a long, long way to creating some really nice opportunities for us. It's just, I think for my tastes at least, anything that I'm not in, I'm waiting at this point in time. We're pretty extended, at least short term, in the upside. If we can get a little bit of a setup developing throughout this week and a push back above that 58, could be a very interesting area. There's room. We say, hey, just because Lynn is at an all-time high and looks extended to my eyeballs at least, doesn't mean it's bearish. Quite the opposite, right? It still looks very, very bullish. It's just, for me at least, not today, right? It feels like I should wait for a better opportunity. There's upside in my mind within this space. So if the market is going to continue to rally, whether it's not without a pullback or have a pullback or consolidation and then a next leg, I would expect that this will be an area. If we get a pullback, I imagine we'll talk lots about the material sector later in the week. I know I'll be thinking about it, so we'll probably talk a little bit about it. On the other side of things, we've got energy shaping up for, in my mind at least, a bearish retracement, and I think it's pretty straightforward. That's the way we're kind of looking right now. The only real feather in the cap that we can give the overall sector right now is we have reclaimed that 9 EMA. We've not broken trend. We've not closed above the daily 20 SMA, lower highs, lower lows. I think this continues to be a very interesting bearish area. And if we do see a pullback, whether that's turned into something bigger or just 2 days of pullback, this will be an area for me that I'll be looking at. We've looked a lot at these stocks. A couple of the ones I'm kind of liking myself. We have Apache, and I can't remember if they were stock or options report on Apache. We've got them in one of our reports this week, certainly testing that old support zone after the breakdown. A little bit of downward movement, and it will depend how it plays out. Probably could use another small day and some downward movement on Wednesday if we're thinking about best case scenario for my taste at least. You also have ExxonMobil kind of in a similar type of a spot, working back into that old support zone, having reclaimed a little bit, need to see some downward movement. These are going to have some interesting risk to reward profiles, if nothing else. And so that's kind of one of the things that's really interesting to me in the energy sector, is not only does it look and feel like a bearish retracement to me, but because of the way we've moved over the last week, there's some pretty attractive risk to reward ratios out there in my mind in the energy sector. So continue to be a place that I like as that bear. I at the very least need to see some downward movement, right? I need to take out today's low tomorrow type of stuff, if you will, and at the very least, more conservatively, what I'd like to see is that kind of develop with a relatively small candle and then let that 9 EMA give out. I just know from my own experience, for me, everything's easier when that 9's working in the way of my trade. So I want to see that happen. But I very much am interested in that energy retracement. Personally, we'll see if that is the right way to be looking at it or not. We had some good movement over in the financial sector here today. Looked like a pretty strong break early in the day. But again, just like pretty much everything else out there today, tale of 2 days. Really great open, real great start to the day, and not a bad, second half of the day, but certainly not bullish, certainly not, not a lot of buying happened the rest of the day. Still a pretty appealing area, in my opinion. It's going to be interesting with the banks. We've talked a lot about the banks, and they've been trying, and I think you could say for the most part successfully, to kind of try to work their way back into neutrality, but you've got challenges. We still haven't taken out that swing high. We're still lower highs and lower lows on a JP Morgan. So, we've held support on a positive note on Bank of America. So these things, that looks, not bullish to me, if nothing else. So they've worked their way back into maybe a little bit more neutrality, but still very, very hard to trust. So much of the strength, as you guys know, has been in American Express, has been over in the insurance, the L's and the CBs, and the exchanges, ICE, and even NASDAQ. We looked at the NASDAQ last week. So much of the strength has been, over in areas outside of the banks, an area that probably could use a pullback, right? And I think that's kind of where we find ourselves for the most part in the market. It's kind of needs a pullback type of a deal. Back to the ETF itself, if we can get, clearly, reclaim this 2730 to 50 zone, and again, depending on how you're viewing it, you're either close or have happened, still some upside over in this area. Again, I think such a healthy thing would be see a pullback in action, see how the sellers react, right? Because it was just over a week ago the sellers were ready to pounce on anything, right? They've not had opportunities, broadly speaking, for a week now. From a technical point of view, it's really important, in my opinion, to see how they're going to respond for our counterpunch for the next swing of the trades, if you will. So that's where we find ourselves in financials. Very similar over on industrials, but a little bit weaker of a candle, right? Coming, running up, running down, but actually closing near the daily lows here today in the industrial sector. Hate to sound like a broken record, but that is where we are with so many things in the market right now. We saw, the merger, news with UTX and Raytheon. Trump sending a tweet out that definitely scared people off, and it kind of worked into other areas. Although UTX was kind of the big one, our NOCs and our companies like that, profit taking day. Certainly not enough to change the trend or anything like that, but we did see quite a bit of profit taking on a lot of these defensive companies, or the defense sector companies that really, really held up. They probably could use a pullback too, and it feels in a lot of ways they've kind of led the charge, so to speak, in the industrial sector, because you still have some things that aren't looking like they've turned around just yet. Again, much like so many of the semiconductors that we've had where we've rallied up, have not really shown a lot of strength. Still, at least in my opinion, look more, we need to see that, we need to see something before I trust from that bullish side of things. So it should be interesting if we see a pullback develop over in the industrial sector. If we see some of these stocks that haven't really, developed these upward trends, along with some of those stocks like the, the waste managements, the defense companies of the world, if we start to see some selling, how will that respond? It could be interesting, might be an interesting area if we do see some selling with, with the big, the big winners pulling back, along with, some selling, and some of the guys that are in some downward trends. Might be a spot we can peek at a little in closer here tomorrow if that's the way we go. Tech, very much like the NASDAQ. Now we have reclaimed that old resistance zone. So again, things are looking pretty decent over here. And I think a big part of it has been the bounce back in the semiconductors. Personally, many of the big name companies are looking nice. We have Microsoft breaking resistance here. And certainly that's never a bad thing when the biggest company in the market's breaking out. Apple having a good run, but again, I don't feel like it's given us a great technical signal. The Visas and the MasterCards really started to push up, a lot like the material sector. So consolidation or pullback feels kind of healthy. Cisco is going to be an interesting one. We got a little bit of a big old, I guess not a little bit, but look at the sideways action that we've seen. Potential breakout, hopefully next week. Hopefully that's the way that this one goes. So again, things are starting to extend to the upside, but you look at the ETF itself and showing quite a bit of strength. Again, those semiconductors and how they respond to the selling, they're very sensitive, as you guys know, to anything trade war related. So they're still a little bit scary from that perspective. But I really want to see how we respond when we see that little pullback. Much like everything else, we can use these previous lows, but because of our big move up over the last week, we really haven't had a chance to establish a great level of support. So I'll be turning to those short-term moving averages, whether it's the hourly 9, which will kind of be the first line in the sand. We can also use, the hourly 9 or 20 SMA. Again, we've been above these averages all week now, right? When these things start to flip, that's going to be at least a little bit of a show in money moving out. So those can be things that we can look to this week as well. I think in particular, how they're interacting, right? Kind of once this 9, if this 9 kind of flips below that 20, might be a sign of a little bit more selling. Back over into the actual ETF, though, not a lot of resistance. I mean, we're talking price resistance on the ETF. I mean, there's not much until we're pushing $80. So again, it's going to take some momentum to get us there. We've got some momentum. It feels like, at least with our price action today, we're running out of it short term, if nothing else, but not a lot of resistance on that ETF. Over in staples, just another day kind of hanging around, just like everything else. Didn't really get cooking really this morning like a lot of the other sectors, really just kind of hanging at a high here. Again, we can kind of see a theme here. A pullback consolidation from a bullish point of view is a good thing. If we get that pullback, then some of those bearish retracements will probably start looking appealing for some entry perspective. So hopefully that is what we get. Of course, this 59 for anybody who's new around here, but of course, if you are welcome, I mean, this is it. This is the last line in the sand on the ETF. This is our last level of resistance before we are hitting new highs, new all-time highs on that ETF. So again, just like so much within the market, consolidation or pullback for new bullish trades. Hey, keep on running for existing bullish trades, but for new bullish trades, it's becoming a little bit on the difficult side of things. No surprise, but technically a good thing over in the healthcare sector. Of course, we broke out last week. We were able to hold that break here today for at least a second day. Very strong. You know, you had many things just continuing to just cook. ABT, another in a long line of stocks that's showing a ton of movement here today. Thermo Fisher, not Toyota Motor. Try that one more time. Thermo Fisher, some of the other medical devices companies too, pushing these resistance zones. We're seeing a lot of strength across the board, or at least back into neutrality in many things. Lilly kind of missed on some trials here today. I don't exactly know what those trials were, but of course there are K-Trade that were candidate that we're following, right? Just last week knocking on the door of the resistance. Here today, a lot of selling on some news. Now, it might have been an overreaction. It is healthcare, right? And so it can be a mover, but we did close below the 200, still holding that support level. So this is what I love about the K-Trade. It's most days it's just, we're still in that middle, but eventually we will break one way or the other, right? So should be an interesting one going into tomorrow. If this selling, continues, coupled with added pressure from the broad market, that support could be in serious jeopardy, in my opinion, at least. So they'll definitely be on my check early list here tomorrow. Many of the other companies, though, well, these guys, they had a poor day, but they're still sideways, right? I mean, we're just kind of thinking ahead, if you will, here. Many things are continuing to perform well. Johnson had a great bounce back. Now, it would be my choice, but have to respect what it's done. UNH pushing into some resistance now, but reclaimed a little bit of an upward trend. We've got Pfizer knocking on the door of a breakout. We've got Merck not too terribly far behind them. On the other side of things, we got AbbVie, right? So we've got a few things on the bear list too, right? This week, AbbVie kind of knocking right on that door. MDT, I know these guys were in Ilka's list last week, pushing into some resistance too. So as you can see, more of the bigger names are looking, in my mind at least, stronger than weaker, but there are still going to be opportunities on both sides in the healthcare sector. Back over to the ETF, if this break is able to hold, and it might be a timing thing, if the market doesn't pull back, there's a very good chance I think that it can. We've got some room. So, whether it's a pullback opportunity and then, move into the swing, or a pullback opportunity to look bearish in some of the weaker candidates, there's some room to the upside. Honestly, if the market cooperates, I expect to see this ETF pushing back into 93 in the not terribly distant future. Won't be able to do it if the market is selling dramatically, most likely. But if the market's mixed or bullish, I do expect healthcare to continue to run personally, an area I do continue to like from a bullish perspective. Over in discretionary, very similar to the whole market. Of course, the big one in discretionary, of course, is Amazon, which, while maybe not a great trading signal, showed some strength after breaking down, closing at that resistance on Friday, pushing back above it here today, recapturing those moving averages, haven't, taken out that previous pivot or that previous swing high, but some nice upward movement. Again, we've talked about this a lot, and I think it's worth, hitting over and over again. This sector, maybe more than any, in a market where I think that's how we should be approaching things, on a case-by-case basis, bullish or bearish on an individual company basis, I think really have to hit that point home here in this space. Even something like a Macy's, showing a little bit of strength here today, working right into resistance now. That would be way too aggressive of a buy. But if we break that resistance, that would be a break of resistance. It would be a little double bottom, right? Of course, you've got things like L Brands on the other side of the coin, knocking on the door of potentially breaking down. And so many things in this area, depending on what the names are, they're looking great, or looking like, oh, I just need a pullback, or I need to look for opportunities. I need to get a Dollar General on my watch list. Maybe I'm not buying into it this late into the run, but with some good signals off a pullback, sure, I would be interested. There's going to be opportunities really on both sides, I believe, throughout this sector, really throughout the summer at this point in time. It doesn't really feel like the whole sector is going to tank or go through the roof. It might, right? We never know the future, but at least right now, I think it's pretty clear that that's kind of the way that the sector is performing. Over in utilities, we kind of skipped over them somehow. A little bit of a pullback opportunity developing in utilities, slowed down a little bit, right? We really sold quite a bit, right out of the gates on Friday. That continued into today's price action, but we have kind of started to slow down a little bit. If you kind of look at the hourly chart, have held that yesterday's or Friday's low. If we can kind of start to reclaim, some upward movement, could be really interesting. Now, one more day of a doji or something like that, or a small bodied candle tomorrow before a candle like this, which with the way it's been, I can't rule that out lately. That would be probably the nicest way for it to develop. I still believe this is presenting us opportunities as a pullback. I think at the very least we need to see it take out today's high before we start to get too excited, and that would be on the more aggressive side of things. I think ideally another small red candle somewhere with a lower high today than today. Could be a lower low or a higher low. I really wouldn't mind either way. And then some upward movement on Wednesday would probably be how I hope it plays out. But if we can recapture this today's high, that would, of course, start to trigger in some of the more aggressive bulls. It would also, on that hourly chart, kind of give this little double bottom break confirmation, recapture those short-term averages. So I think this could be an area we keep a closer eye on here tomorrow as well. Now we'll come back into real estate on how I missed the utilities. Not quite as pretty, or at least potentially developing as pretty as the utility sector, but very similar pullback vibe to it. I think still the trends are very much intact, and it's just really a matter of, are you interested? Do you believe in those trends? And are you interested in those areas? Don't think the signals are here. I think it could be I think it's easier to see a scenario where move into utilities tomorrow than REITs. But again, that's my preference and my bias. I understand that. A little more pullback, that could be really interesting as well. Of course, if you are new around here, this is their high point, right? So again, REITs have really done well as of late. I don't know that tomorrow's the entry to be running back into the REITs as a whole, at least from a timing perspective, but hard to argue with the strength. A little bit of selling over there here today. And then lastly, over communication services, one of those areas that's looking a lot more like a pullback. Facebook's the interesting one, of course. They ran all the way up into that swing low that basically turned into that intraday resistance. Doji hanging at that 9 here. This is an interesting spot. I know some people are looking at Facebook from a bearish retracement opportunity. We still have that intraday upward trend, right? Still, if we just look at this and think about it as a chart, as we see some upward movement go above the body, or the little ceiling that's developed over the last couple of candles, could be an entry point, right? So we're still in that upward movement. I'm very interested in what happens when we're not. I don't know that I believe that Facebook's going to have that complete turnaround rally. Certainly a step here today towards that. Still, intraday trends are intact, just like a lot of things in the market. We were really seeing a lot of selling, probably a bit of an overreaction, but probably another entry, bearish entry, if we see some downward movement, if we are, of course, bearish on Facebook. So Google, of course, the other big name within this space, just continuing to basically do what Google's been doing lately, kind of, not really inspiring a lot of confidence. So we're able to kind of work back into that 9 EMA today, but this chart has a lot of work before I think you can, be very excited if you're not a bear on the stock. I think you're also, we might have brought it up, I can't remember, but I think you're starting to find EA to go back and as another candidate into the K-trade list. Really starting to develop very clear floor, very clear ceiling, losing at that ceiling pretty substantially here today. So, another kind of victim of the overall sector, I guess, but starting to kind of develop into that, a break either way could be a signal, although I hate trading EA, as you guys know, because I always want to go bearish on EA. And when I go bullish, I don't feel comfortable because I don't like the company. That is just me, is all. Of course, we saw, AT&T and down big here today. Certainly still hanging at resistance, but not looking great in today's candlestick. Verizon also down big here today. So we saw quite a bit of weakness in this space here today. That's not a great looking chart. Lower high here today, not all that exciting. Netflix as well. Netflix really struggling here, big old bearish engulfing candle. I don't know that that's a great trading signal. It might be, but I don't think it is for me, but doesn't inspire a lot of confidence. So we're seeing some challenges over on Facebook, some weakness in some of the other top components within the communication services. Certainly an area, tech's done enough to at least get me interested, as a prospective buyer. It's shown some good signals, and it's just a matter of going with those signals. As you look at the communication services, I don't think you can make, at least across the board, the same type of argument. So this will continue to be an area that I think we have to be very careful on. I will be skewed to the bearish side, at least with where we are right now in the communication sector as a whole. Although, just like always, I'll be looking to individual components. I don't like working with the ETF because it's so heavy on Facebook and Google. And yes, I am with you, David. And it feels like it's been a long time. Although their new Star Wars game looks like it's got some promise, but the problem I have with EA is I'll look at their games and I'll, that kind of looks cool. It'll have some promise, and then I always feel, at least lately, I feel let down again and again and again. And the gamer in me is very critical of EA as a gaming company, which can work its way into the trader in me. And so I usually just leave EA alone. So to a lesser extent, Activision Blizzard as well. I'm more of an Activision Blizzard type of a guy. Those are more of the games that I play, at least regularly. But I am very biased when it comes to the video game space. So yeah, I mean, I wish it wasn't the case. I wish I was just being grumpy. It's not a unique opinion. A lot of us gamers, you get a dozen or so of us in a room, probably the heavy majority will complain more than they will praise our friends over in EA and their loot boxes. So we'll see. So that's where we find ourselves in the communication services. Again, as we're kind of moving into the week, we're going to have opportunities, a lot of interesting opportunities on the bearish side, because whatever the ticker symbol is, whatever the sector or industry it is, there's probably going to be some candidates that are looking appealing from a bearish perspective. There's still going to be things to buy. It's just not quite as many great textbook trades because of that steep run up, right? That's all. That doesn't mean they're not out there by any stretch of the imagination here. So, oh, absolutely, Adib. I am counting down the days, my friend, me, my brothers. I imagine I'll be bringing a couple of the Justice brothers over with me as well. Yeah, so we'll maybe we should make a tackle trading guild for all of us gamers over on Warcraft here at the end of the summer. So yeah, we're all excited about that for sure. That, if nothing else, should be a good short-term run of life, 14, 13 years ago, when we didn't have as many responsibilities, if you will. I don't know. I don't really feel like I have any more. I think I actually have less responsibilities, but I'll go with it either way. So that's where we find ourselves. Again, much like I think we should always be handling things, but especially in these type of market conditions, listen to your charts, be open to both sides. Being a perma has been bad for business for a while now, right? Being a perma bear, even though we saw more selling than buying in May, there were great bullish opportunities, all over the place, right? Some of those, defense companies were just cooking, So as always, I think we're open to both sides of things. It's always okay to have a little bit of a skew, I think, but I don't think it's ever okay to just be a bear or just be a bull. I think being open, especially as a trader, is always the number one thing that we want. We should be getting interesting opportunities here in this week, probably on both sides. I will say that while the market seems to have mellowed out a little bit, again, I'm not going to, pretend that I don't believe that we're, a tweet away or, a bad news away or perceived bad news away from the trade war kind of rearing its ugly head. So I do expect, while it's kind of been nice that it's not been here and not getting whipsawed of things over the last week's kind of been nice. I imagine you guys probably feel the same way, and maybe it will be behind us, but I'm still not going to believe that it's going to take more than a mellow week with no sell signals on anything other than the shortest of time frames or individual components of the indexes to get me to feel that way. Looking at the VIX kind of illustrates that point. We've dipped down a little bit. We've kind of hung around. Do we trust it? We've not really dropped too much, right? These last couple of days, we had pull back late last week, but really the last few trading days, it doesn't seem like volatility's gone. It just hasn't come back yet. So I think that's what we'll be keeping an eye on as we're moving forward. Dollar, after catching its intraday footing on that 200 last week, little bit of upward movement, not a particularly inspiring candle here today. It comes down to faith, I guess. Buying off the 200 has been very effective on the dollar as of late, and I can't fault somebody for doing that. From a risk to reward point of view, probably makes a lot of sense. I don't love that we've broken support. We've given up those averages. That 9 is falling down. For me, if I'm interested in this pullback, I want to recapture that 9 EMA before I'm jumping off of this 200-day moving average. Of course, that means weren't able to catch this one all that well. Wasn't able to catch this one either. So probably means it's going to go by without me. If this gives out, I mean, we've got a little bit of history in the 96, but really, down almost into the 95 range, there's not a lot, so there might be a little bit of selling if this can't hold for us in the dollar. This is an important fight, at least in this ballpark, in this zone where we're at right now. I'm really not interested at this point in time. You guys know what I've been looking for. I didn't get it yet, or maybe I never will, or maybe not in any reasonable time frame, but I'm still waiting for that weekly close of the break. Don't really think this is in a great spot price wise, and what it's been doing. Can't argue with buyers wanting to come off of this 200. The signals are going to need to be there if we come into an hourly time frame. Maybe if we can recapture these highs of the day, maybe then we can kind of start talking about it. But I'm going to be, I would be looking carefully at the dollar right now, showing some signs of weakness within a larger term strength, in the trend, and overall, I think one of the better currencies out there personally, bigger picture. So I'm not really loving where we're at. Consolidate here for a few days, and then maybe we can talk. If we can build a floor and then a little ceiling and break above, reclaim that 9, maybe a pullback opportunity over on something like UUP, although they're not necessarily the biggest mover in the world, could be in play. But we'll need a few days, I think, for that to happen. Over in the metals, a little bit of a pullback here today, not necessarily a bad thing. We've had one heck of a run over on gold, not terribly surprising. I would love a pullback opportunity to develop on gold. Would like to see a little bit of slowing momentum in the next couple of days into really anything, whether that's the 9 EMA, this old resistance, the 20 SMA catches up with us, we flatten out and spend 3 days and hanging out, and then upward movement on Friday. I'm really open to this pullback opportunity. It's just not going to be off of a candle that looks like this. Those of you who know me know that, right? So we'll see where we are on the price side of things. Still looking really good overall in my mind. A pullback was in order, and if we miss the pullback and the runs and breaks out, I think that's a really good technical breakout opportunity for us as well. So I do think somewhere in the not too distant future, there's going to be something that I at least think is very interesting from a bullish side of things. Could be as early as doji tomorrow, upward movement on Wednesday, if that's the way it wants to play out. So still above everything. This was a respectable level of resistance, so I'm not surprised that it struggled there. I'm surprised how quickly it got there a little bit, pleasantly, but surprised nonetheless. Still kind of in a pullback side of things. Over on silver, much bigger concerns. After fighting so hard to recapture that $15, I mean, we fought that all week, the second half of last week, giving it all back here today. That is a very bearish candlestick. It's hard to really say anything other than that. I mean, we basically have given up everything that we fought for so hard over the last week and a half, with the exception of the flattened 20. We reclaimed 15, it's gone. We reclaimed the 50, the 200, the 9, gone, gone, gone. The 9 is now hooked back down with all of that price movement. Again, if I'm looking at the metals from a bullish perspective, it is not going to be silver. It will be gold. That chart, you just compare the two charts, and at least in my mind, I always want to go with what's, if I'm a bull, the strength, a bear, the weakness, and this continues to be very, very choppy. I've got a little bit of a support zone. If this support zone /20 SMA moves out, I think you have to be very concerned about that. That is a rough start to the week. There is no doubt about that over on silver. So from a bullish side, I don't really know even where you're at. I guess, to each their own, but I don't really see it. But it continues to be very choppy. It's not been a great trading environment in silver. There's been a few days that if you woulda lately, and a few times I've said, oh, I should have. But for the most part, I've not been unhappy ignoring it as a whole as of late. Still a very difficult environment to trade, at least in my opinion. It's still got to recapture that 15, in my opinion. And while we briefly did it on Friday, that was a long time ago now, according to price, if nothing else. Over natural gas, a little bit of a positive start to the week, but it's got a lot of work to do, right? It's got a lot of work to do, in my mind at least, before we're talking anything bullish. At the very least, we've got to reclaim this breakdown point at the very, 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 very least. I will certainly be open to a bearish retracement within this space. I believe this break is confirmed. So even if we were to, and I think that should be difficult, I think if we were to retrace even a little higher, it could be okay as far as a bearish retracement would go. I think this break has cleanly been confirmed. Now, if we work back into that breakdown point, see some sell signals, that could be very appealing from a bearish perspective. From a bullish perspective, you tried, and one of these days you're going to come back, bulls, and I know that. Natural gas has taught me that over the years, but right now, not much of a bullish argument to be made, technically, at least in my mind, over a natural gas. So a little bit of a bounce back day, a little bit of a drift into that breakdown zone could open up some interesting opportunities in natural gas or even in UNG, the ETF that tracks natural gas if you're not a futures trader. And lastly, over in crude, a little bit of that bearish retracement vibe going on, worked into that 9 here today, failed that first test at least of the 9. We've got this 50 zone kind of as a support level. Would like to kind of see a little bit more bearish momentum develop. But if we look at this on the hourly time frame, you can kind of see that it's already started to lose some of that momentum, right? I don't know if you make a strong case, but after, really kind of running up for those few days, have all of a sudden that 9 hourly has crossed below that 20. They've stopped moving up and started moving down, even broken below, for what it's worth, that 9 or that hourly 50 MA. So I think this is going to be an interesting test from the bears, a little more downward movement. I could see, people getting on board that this is a bearish retracement in crude. If you're a bull, you want to see that anyway, in my opinion. You need to see it sell. You need to see it hold support or create a higher level of support and then break resistance for your bullish signal. So I'm looking at it through a bearish lens at this point in time. And so that's where I'm looking is the pullback back towards that $50 support level. But if we're able to establish something or hold that support, create that W or that higher high, higher low type of a pattern, well, then we can have something to talk about over in crude. Right now, still think it's very, very brave to say it. At the very least, it's very brave to want to be a bull, in my opinion, on crude where we are right now. So, ladies and gentlemen, that is where we find ourselves after an interesting start. And much like I kind of thought at the end, last week, as I was kind of scanning for new trades, for the new bull trades that aren't kind of extension trades, there's going to need to be a little bit of a breather, at least broadly speaking. There's always something that looks great, right? But broadly speaking, I think a pullback is what I'm pulling for new trading opportunities going into the rest of the week. That kind of starts off with those bearish retracements and then ends up maybe with some nice bullish retracements by the end of the week. We'll have to see if that's the way that it goes. Again, just kind of keep in mind that we're really in an environment where good opportunities are on both sides. I know we've talked a lot about McDonald's, and McDonald's, a lot of selling here today, holding that 200, bouncing right off of that. Could be, again, not my style to buy this a day after this happens, but could ultimately develop, there's still going to be good opportunities, I guess is the way to look at it. There will certainly be some good looking bearish retracement opportunities out there. I think you've got utilities shaping up for some potential bullish opportunities, a potential bull retracement at least. Lots of interesting companies that have been in these strong trends even throughout this market, maybe pulling back or consolidating, could open up some interesting doors for us as well. So should be a fun week in the market. We shall see where it takes it. But with that, ladies and gentlemen, that is going to do the market recap for today. But as always, thank you so much for joining me. Appreciate your time. Always more fun to do this with you guys than on my own. So thanks for hanging out with me, talking trading. If you're watching a little later here today, thank you for taking the time. Hope you find it helpful, and great to have you as well. Let's see, I've got my onboarding webinar tonight to talk to some of our new team members. So that should be a lot of fun here today, no doubt. Oh, nice, Whitney. Good, good. So heading out to SLC, that's what I like to hear. Awesome. Well, maybe we'll get a chance to bump into each other. I'd be all right with that. So you guys are all very, very welcome. It is my pleasure, guys. Thank you for joining me, not the other way around. You guys have a fantastic Monday. Of course, if you are new around here, be sure to subscribe to the channel, hit that notification bell. Join us over on Twitter at Tackle Trading. Come hang out with us over there as well. You can always find me at Frank Martin23. Be sure, if you haven't had a chance, to check in on the Instagram, on the Tackle Trading Instagram. There's some cool stuff going on over there. I know a lot of you guys have had a chance to do that, but that's pretty cool. I'm not an Instagram kind of guy, but even I go over there to see what's up. So I'll look forward to hearing what you guys. We'll look forward to hearing what you guys have to say about that. All right, guys. Well, I'll let you get out of here, but you guys have a great Monday afternoon. Get ready for another exciting week here. We'll pick up same time and channel tomorrow afternoon. So get out of here, guys. Have a great day. I will see you tomorrow. Bye, everybody.